Oh, we're here. Okay, we're even running the stinger. All good. Okay, so first story of the day. Well, Bitcoin hit a record-smashing all-time high of 124K yesterday. The fuel behind this rally, well, it was a heady cocktail of the Fed might actually cut rates, institutional money is here in size, and the Trump administration is speedrunning every pro-crypto policy you can possibly think of. And Trump's leaning into the whole crypto president brand harder than an influencer selling protein powder, even roping his family into sector activities over the past year. One of the biggest moves, last week's executive order paving the way for Bitcoin and other crypto assets to be included in 401k retirement plans. That's right, your MEMA can now stack sats next to her mutual funds. 2025 has also seen stablecoin regulations get the green light and the SEC quietly reworking rules to better accommodate the entire crypto asset class. Add a weaker dollar into the mix, it's lost ground against the euro and the pound, and Bitcoin starts to look even shinier to anyone tired of shrinking yields. Now, analysts say if Bitcoin can punch through 125 to 150, then we're not too far off even more all-time highs, and the models certainly agree. The Bitcoin Intelligence Report projects a year-end target between 150 to 200K with the possibility of 1.2 million to 1.5 million by 2035, and that's without assuming some wild speculative mania. Their power law model has tracked Bitcoin with some freakish accuracy for the past 16 years. And right now, it says the accumulation zone is between 114 and 117K, and it's pretty rock solid. So that's triggering the current push we've seen as of late. Now, Bitwise CIO Matthew Hogan says the supply-demand balance is now so skewed toward demand that sellers at 100K eventually gave up, making $200,000 the next logical stop. Now, logical in Bitcoin terms, of course, where logical also includes million-dollar price targets. For now, resistance sits just above 130K, but the fundamentals say the real game is only just beginning. Bitcoin, the cleanest barometer of global liquidity, the original liquidity sponge, if you will, and still the hardest money in the room, is certainly having a moment. And if the macro stars stay aligned, it's going to be a long one, hopefully. All right, we got us joining us today is my good friend from Xapo Bank, Joe Epple. Let's bring him on in. Joe, how are you this Thursday? Great to have you back on the show.
Hank, I'm doing fantastically today. How are you doing? Great to be back.
Oh, I am also doing fantastically. I was doing a little more fantastically about 12 hours ago, but hey, we reached all-time highs. We've seen a bit of a drawback. I can't complain. We've had a lot of movement, as I mentioned, in the last 24 hours, partly because the U.S. government suddenly outed itself as one of the biggest Bitcoin whales alive. Bitcoin blasted to 124, Trump went full speed crypto president, and the Bitcoin tripped over its own shoelaces back to 118K. Is this the start of a monster bull run, or just Bitcoin doing its usual don't get cocky routine and then doing the exact opposite of what we'd expect? What do you think?
Oh man, good old Bitcoin and trying to predict its next move. I think, look, I think the United States coming out is more or less saying that the S in USA is for Satoshis is definitely not going to be a bad thing for the market, especially as we've seen over the last couple of days. Markets seem to be betting on an interest rate cut coming out of the Fed, and a little bit more interest on risk on assets seems to be happening from my basic understanding of financial markets, and that seems to be pushing Bitcoin up along with everything else. So I do think if that trend holds, right, we're going to continue to see Bitcoin climb, and we're certainly very bullish and continue to see this as not the end of the bull market. I think we're still very much within it, and still some road left for this bull to run.
Yeah, no, I certainly would seem to agree, but I got to ask, what do you think was the cause for us hitting those new all-time highs and then dropping back almost immediately in like 12 hours, $5,000 or $6,000? Do you think it was some profit taking? People are still taking off some of that foam from the top and putting it into hot girl altcoin summer? Or do you think maybe it's people were expecting Bessent to come out and say we were going to actively start acquiring Bitcoin in the USA? Any thoughts on that?
Yeah, it's a great question. And look, I think if we all knew why the market moved the way it does, then we'd probably be on our private islands. But I think we can suppose that every time Bitcoin hits an all-time high, I think a little bit of both of those things happen. So some people want to take their profit, and that obviously leads to a bit of a market correction. But at the same time, I think people like the Bitcoin maxis of the world and the people who are kind of penciling in that $1 million price point. Um, when things happen that are good things, but they aren't extraordinarily good things, and here I'm talking about like the United States saying it's got, you know, give or take 20 to 50 billion dollars worth of Bitcoin on its books. That's pretty fantastic. And if people were expecting the US to say we're going to be, basically following the strategy playbook and buying a couple thousand coins every month, that's probably a little bit naive to assume that the states would be taking such an aggressive policy at this point. So perhaps people who are overexcited saw this as a kind of a bearish indicator. But in all honesty, I see nothing but positive signals. Bitcoin goes in, 2 steps forward, 1 step back. We're sitting on, what is it right this second? 118,000. If you told me that 6 months ago, would I have believed you? Maybe not. So let's see. I think it's just normal profit taking and people getting too excited, a little bit scared, retracing a bit, but nothing to be too concerned about.
Yeah, I think you're right. I'm going to have to say, though, I'm going to color myself a little disappointingly naive. I was hoping we'd come out and say we were going to start stacking, but as we know, government always rolls at a snail's pace, so that was probably a little overly optimistic on my part. But you're right. If we had asked for 118K 6 months ago, I would have taken it in a heartbeat. So I think the momentum is still very much on course, and we're very much on track. All right, we got a lot to talk about today, Joe, so I'm going to go over this next story. We're going to bring you right back and chat about it. All right?
Perfect.
All right, let's do it. Okay, Norway's sovereign wealth fund, the largest in the world, now has indirect Bitcoin exposure worth 844 million bucks. That's 7,161 BTC, which is impressive considering they probably still call it the Bitcoin. Now that's a 192% increase from last year, which means either they've suddenly become closet maxis or they've stumbled into the best oops in finance history. And no, they didn't log into Coinbase and start rage buying. This is the byproduct of owning shares in companies that hoard Bitcoin like boomers hoard Tupperware lids. Now, the biggest enablers, Strategy and Marathon Digital. Together, these two control over 3% of Bitcoin's total supply. That's more than $81 billion worth. A researcher at K33 says this all proves Bitcoin is finding its way into any well-diversified portfolio, intentional or not, which is analyst speak for you can't stop it. All right, we're bringing Joe back. Joe, Norway's sovereign wealth fund just accidentally ended up with almost $1 billion in Bitcoin. Do you think this is the future? Countries becoming closet maxis without even realizing it?
I love the term closet maxi. I think that's going to go on the Bitcoin terminology list pretty soon. Look, I mean, I think this is the net result of Bitcoin treasury companies, right? Companies that are putting large parts of their balance sheet or some of their balance sheet into Bitcoin, and companies the size of Strategy, which are S&P 500 companies, are going to make their way soon into everyone's portfolio, whether you realize it or not. Your mom could end up being a closet maxi and never know it her whole life. And when it comes to Norway, I mean, the Norwegians have the astronomically successful sovereign wealth fund that is the envy of everyone who's not a Norwegian. And to know that they have stacked sats closetly or in a very open way, either way, the net result is the same thing. The biggest sovereign wealth fund in the world is stacking sats, and that's incredible. So I think we'll see more of this start to happen. I think what you mentioned earlier about President Trump signing the executive order or the whichever piece of legislation it was, allowing 401ks to stack sats at the same time, we're going to start seeing people who don't even know that this is happening, who can take a look at their investment portfolio and understand exactly what every single share means you're actually investing within. And that is only going to fuel demand for a very, very low volume cap supply asset, which probably means that price is going to climb. Not financial advice, but that is what the trend seems to be showing us. So long may it continue, and I definitely don't think this is the last we're going to see.
Yeah, I mean, their Bitcoin exposure jumped 192% in a year without a single direct buy. Do you think that this is proof that Bitcoin is basically sneaking into every serious portfolio, whether they like it or not? We're seeing it here, we're seeing it in 401ks. It seems to be the unstoppable tide of Bitcoin, right?
Absolutely. And I think the fact that it's there without you even knowing it's there goes to show how integrated Bitcoin can become with the existing financial system, as well as operate entirely on its own outside of it. And that's just one of the most magical things about Bitcoin. As a bank that's existed to merge the worlds of traditional finance and the new Bitcoin world, this is something Xapo has been enabling and seeing for quite some time now, where people maybe want to be able to merge those worlds consciously and have their Bitcoin sitting in the same bank account as their US dollars, or at the same time are more comfortable investing through a proxy like an ETF, or not even really necessarily realizing it's there. And all of these things, I think, really just speak to the resilience and the innovation behind a currency that can be incorporated into traditional financial instruments, or simply be bought and sold directly. And either way, you're making what is likely a pretty solid investment.
Yeah, I mean, in between Norway, we got big corporations and random mobility apps are buying Bitcoin. Are we officially at the point in Bitcoin's history where not holding BTC makes you the guy unknowingly wearing the dunce cap in the corner of the room? Is that where we're getting right now? Are we reached that point yet?
I mean, it depends. I think the real giveaway will be what happens around the Thanksgiving table in the States in a couple of months' time. How many questions about the magic internet money you get. But in all seriousness, I do believe that we are kind of passing a bit of a tipping point here. If you had told me, when I first started in this industry in 2016, that in less than a decade, we would have the United States talking about its Bitcoin balance, we would have 401ks with Bitcoin exposure, and Bitcoin would be trading at a north of 120K on occasion, we would all say that is super duper crazy talk. So where we are today, if we've made this much progress in 10 years, I think it's going to be pretty wild to see how it unfolds. And I do think, if you think 120 is a high entry point, or 118, in a couple of years' time, it might seem super cheap. So for sure, why not get a little bit of that exposure? It could just be buying Apple shares early back in the day.
Yeah, no, I can't wait for Thanksgiving this year when I presumably ruin another family dinner by telling everyone I told you so once Bitcoin inevitably comes up again. It's one of my favorite holiday pastimes at this point. So I'm excited for that. All right, stay tuned, Joe. We're going to bring you right back because I want to talk about this next story with you in just a sec, because Steak and Shake just had another monster quarter and they're giving Bitcoin the credit. The burger chain started accepting BTC in stores across multiple countries in mid-May, and apparently that was enough to flip the script on their biggest rivals. In Q2 of 2025, their in-store sales jumped nearly 11%. Meanwhile, McDonald's, Domino's, and Taco Bell were busy posting slow growth or outright declines. Or in other words, while Ronald McDonald was losing customers, Steak and Shake was stacking sats and burger sales. Now, let's be clear here for a second, though. The idea that Bitcoin is solely responsible might be a little convenient because the BTC miracle kicked in halfway through the quarter, and there were other moves at play, like back in March when Steak and Shake aligned itself with the Trump administration and RFK Jr.'s Make America Healthy Again initiative by frying food in beef tallow instead of vegetable oil. Because apparently nothing says health like deep fried
You are fake news,
baby. Hey! Now, they also had the good fortune of McDonald's dealing with international boycotts, which tends to help when you're in the same business. But don't expect Steak and Shake to dwell on those details. From their perspective, Bitcoin is the golden ticket, even if the real picture is more complicated than that. They're already talking about Lightning Network payments to speed up transactions, which means your double steak burger and fries could arrive before your transaction even confirms. And in a fast food market where crypto payments have mostly